it's Monday. It always helps to turn on the microphone. Good morning, everybody. Welcome to a new episode of Stocks for Breakfast. Hope you all had a great weekend. Some interesting football this weekend, some interesting market action last week. We're actually going to start out talking today. In this video, we're going to talk about whether or not last week was an easy week to trade or a tough week to trade, despite the market making new all-time highs. We're also going to do a rundown of all 30 stocks in the Dow Jones Industrial Average today to set up some opportunities this week to see where there's pockets of opportunity. There's a lot of stocks that had pretty decent rallies last week that are well beyond their optimal entry point. So I would not be looking to be buying those stocks, maybe as day trades, but certainly not as swing trades. And there's one really popular stock at the top of that list that looks amazing, but I'm not going to be buying it today because it's too far from what we believe is the optimal entry. So we got a lot to cover today. Like I said, we're going to jump through all 30 stocks in the Dow Jones Industrial Average today. We'll get a little bit of feedback. We'll have a conversation back and forth, determine whether or not we think those are stocks to buy. We're going to talk about whether or not we think the bull market will continue and what we need to see. We're going to talk about stop losses. We're going to talk about order flow. There's a lot to do today. It is Monday. We have a ton of stuff to cover. So stick around. I'll be back in just 1 second. Okay. Thank you so much, everybody. I just want to say hello to everybody. Craig, Richard, Ross. Hey, Ross, how's it going? Will, how you doing, pal? Haven't spoke to you in a while. Very, very nice to see you here today. Sean, how's it going? Will, hope you're doing well. John Weinberg, always a pleasure to see you. LJ, want to thank you so much for being a part of our boot camp. Really appreciate that. All right, so we're going to work on over. We're going to go right away into this. We're going to take a look at the sector rotation. Obviously, the picture changed dramatically from about a week and a half ago where it was all red. Now it's all green. Last week was amazing. Technology, definitely the place to be last week, but that's actually we're going to talk about basic materials and energy stocks. If you've been a regular viewer of what we do here every day, those two sectors have been there. But the challenge that we've had with energy near the highs and basic materials near the highs has been actually challenging to find good ideas. So those sector readings have been working their way up the higher part of the list with some of the stocks that we might not normally be trading. And Alcoa is actually one of those. Alcoa had an amazing day on Thursday, but still stuck in the middle of nowhere. Maybe we could actually point that out and kind of show you what that actually looks like. Right there. This right here. So it actually had, if you look at Thursday's price action, just absolutely perfect to be on the day trading side. But, and this is actually something I want to talk about because it's a very common question that we get. For some reason, I'm not really sure why, but I want to address it anyway. We get a lot of people who watch these videos asking about whether or not everything we're doing is for day trading. And it's actually completely the opposite. Everything we look at here is for swing trading first. Then we make a decision whether or not it's a day trading idea. So I want to be clear on that. And what's kind of interesting is whether or not something's a day trade or a swing trade really depends on how far it is from the optimal entry. And we're going to use an example of that in Apple in just 1 second. But what I want to get across is the reason that everything I do is for swing trading purposes first is because if I don't think it's going to go up over the next couple of days, there's no reason for me to day trade it today. That's probably something you want to write down because it's a small part of the concept, but it's really pretty big. I mean, if you just think about it in the context of if I don't think it's going up, why would I be looking to day trade it today? Now, you can make the argument that maybe you want to you drop down on the 5-minute or the 15-minute or even the 1-minute chart for short-term trends, and that's absolutely fine. However, that's not the way I trade. I don't trade on those micro time frames anymore. The 5-minute chart on the day trading side is the minimum time frame I go to, but I'm not even using that for trends. I'm using the higher time frames for the order flow. Then I drop down to the 5-minute time frame. But if it doesn't make sense from an order flow perspective in the first place, like you could see here in Alcoa, in this case here, I'm not swing trading it, but Thursday was only a day trade scenario. So I just want to bring that up because we get a lot of people requesting information about the boot camp and what actually, whether or not it's good for them as swing traders. And I want to touch on that as well, because obviously we're talking about the stock market at all-time highs right now. And a lot of people who come into the boot camp are learning for the first time and really looking for a foundation under what they're doing. And the question we get a lot is, if I'm working my full-time job, does it still make sense to learn? And the answer is absolutely, because we have, not only do we have the program in there and the real-time community, but I think this is probably one of the biggest things, which obviously would be something you're interested, because you're here at 7:30 in the morning. It's the coaching that is the biggest difference. We have 10 hours of coaching every single month. That's a lot of coaching on top of the real-time community, on top of having the online courses and whatnot. So if you're here with me now at 7:30 in the morning, or if you happen to be watching a video later, I want to give you some advice on how to accelerate your learning curve. Ask questions, whether that's here on YouTube. You can ask questions below the video in the comment section, or obviously if you're in the boot camp, take advantage of the coaching call. And the reason I'm saying this is because learning what to do and learning how to apply what you just learned, they're two different skills. One is studying and one is actually doing. And the problem that a lot of traders have is getting to that second part of actually applying the strategies, and having the feedback of when a trade doesn't work out. How do you handle that? Having the feedback of, it did exactly what I thought it was going to do. It rocketed in my favor. Now, how do I handle the winning trade? After that, the coaching part after that of the trade management is really where the growth comes from for you personally. So I can't express strongly enough. I know that we're here on YouTube and we're just having these types of conversations on YouTube. Ask questions. Take advantage of the time to ask questions. But I want to make this clear. The best questions are not, what do you think about XYZ stock? The best questions are about strategies, tactics, and mindset, because those are the things that you're going to take with you forever. One stock pick, while it's exciting to have those stock picks, that's not a lifelong skill. Calling out a trade and asking me if I think it's a great idea right now is not as important as you saying, am I looking at this right? I think this is a good idea. And you'll be shocked at how many people call out ideas that are just completely bad, for lack of a better way of putting it. But that's where the back and forth and the conversations are pretty good. So we're going to talk about the rotation today. Obviously, the market feels now it's a little bit overheated, where everything is on the bullish side. So now we're going to talk about whether or not some of the ideas that we like coming into the week are still valid as swing trades. The tape has changed dramatically. And I know that sounds kind of crazy, because we're actually sitting at all-time highs right now, especially in the SPY. And obviously tech stocks were strong. We closed at new all-time highs on Friday. We're opening higher again this morning. However, as we wrote in our morning brief this morning, last week was anything but an easy week to trade. If you put in context where last week came from, we actually mapped out on Monday that we wanted to see the market trade above the opening price. And if it did, we would be aggressive. What we did not anticipate is a gigantic gap on Tuesday, kind of chewing up all of the profit potential that we expected to have during the week and get involved during the optimal entry, where there was still profit left to be made. So if you found last week challenging, I'm telling you that it was. There's no other way to put it. Last week was challenging because a good part of what we expected to earn, if the market unfolded the way we scripted, a good part of that profit potential was taken up on Tuesday. So the rest of the week was really more kind of trading for cash flow and not looking to build bigger positions. And I pulled back a lot on my swing trading just because of that, the profit potential. So now we're going to work our way into this week, and now we're resting at all-time highs. Is now a good time to think that the bull market's going to continue, which, if you get into some of the headlines over the weekend, inflation going up, consumer price index going up, everything appearing to be not good for the market, but the market continues to grind higher. So the reason I'm bringing that out, and the reason we're talking about all-time highs today, is that it is now critical to understand how to read the tape and how to read the order flow, because we are clearly not in the conditions that we were, let's say, prior to October. Even though we had a rally in October, let's say October to November, prior to that, and the 18 months prior to that, all of the government intervention was still on the table, quantitative easing and all of that kind of conversation. There was no conversation about possibility of interest rates going up, no conversations about how strong inflation was. That has changed. So what that means right now is that you need to understand how to read the tape. You need to understand how to identify a potential change of trend, and when stocks go into a box, if you should be in cash or if you should just scale down and trade for cash flow. So here's the big thing I want to get across, and this is probably the most important thing that we're going to talk about today. When we're talking about reading the tape, we are specifically talking about the weekly charts. And you can see here clearly when we're trending, there's something to do. We might see some melted candles in here, but there's something to do. Right now, you can see on the weekly chart, we had this really vicious move to the upside, which was amazing after this pullback. But now we actually have a 1, 2, 3, 4, 5, 6 week trading range in the market. 6 weeks, 6 weeks of the market that is basically at the same price. That is what we call in the community a PCOT. So in my active trading master's class, the one that I wrote a couple of years ago, PCOT is a potential change of trend. And the biggest thing that we talk about for a potential change of trend, that's where money goes to die. If you don't recognize that the market is now stuck at the right price and you continue to trade aggressively, you're going to be buying highs and selling lows and feel like you're completely out of sync with the market. And that's generally the time when I scale back a little bit or trade for cash flow, or I'm just in cash. So I just want to point that out. And that's actually something that hopefully I could teach you today. The best time frame to read the bigger picture, the best time frame to read the tape is on the weekly charts. You'll start to see a big green up week, a big down, and you'll see them alternating. You'll see the week then go into a melted candle, which is actually kind of what we're seeing right now, where we had a big obvious move to the upside. Then we had indecision. Then we had indecision. These 2 weeks of indecision led to 2 weeks of selling, led to 1 week of buying, and now resting at all-time highs and closing at all-time highs. So I want to say this in the strongest way, that with my experience, a lot of new members who reach out to us, this is the first time they're ever trading and they're seeing this stuff for the first time. I have a lot of people, relatives, even especially right now, asking me, should I take my money out of the market? All of this headline news that I'm seeing right now is not good data to think that the market's going to continue. This is where you really need to decide what kind of trader you are. Are you an investor where these back and forth movements on week to week really don't make that much of a difference because you maybe believe you bought good companies and you're holding those companies for a long time? Or are you actively managing? Are you right now a money manager actively managing positions? And it's critical that you understand when the tape has changed and where the easier money is and where the rotation is happening. If you're in the first camp where you're a long-term investor and you bought stuff based on value, you still need to know it, but it's not as critical because you bought the company. You're not buying the tape. If you are an active trader, if you are actively managing your money right now, please write this down. The weekly chart is the chart for you to work. Okay. So we're going to jump over into a couple of ideas. We're going to take a look. We're going to go all up and down the stocks in the Dow Jones based on how they're trading right now. And we're going to go over a fast conversation about whether or not they are in play right now and whether or not they're in play relative to a good spot to look to initiate a new trade. We're going to take a look at Apple first, actually. And I want to give you the context of what I'm talking about for Apple first, which is Apple just rallied again last week. The chart looks amazing, but there's not a chance in the world I'd be initiating a new swing trade today because it's already done more than it normally does. So that means that and I'll just use numbers, if it normally goes $15 in a bullish move and I'm looking to initiate a new swing trade and it's already gone $21 in the most recent move, which is the numbers, that means it's already used up the profit potential for me to get involved. So that's the push. Now I'm waiting for the pause before the next move. And I'm telling you, that is by far the biggest mistake that new traders make in the market, is not understanding the optimal entry. And that's the difference. Again, we say this a lot, but it's absolutely the truth. The difference between chart reading, where you're just spotting a stock that's flying, from being a trader who's trying to get the best price to justify risk for that next move. So do I think right now that the bull market will continue? Right now, the market, and let's actually go right over to the chart. If I had to give context for what the market could potentially do right now, what we are right now is stuck. We're stuck in this box, which is essentially now more than that. It's actually 1, 2, 3. It's basically a 7-week box. So I don't have a bias right now until we get out of this window right now. I don't have a bias until we clear this window. Last week was awesome. If you remember, we talked about this week and this week, 2 weeks of non-bullish activity. Last week, we said if we stay above the opening price and the market goes well bid, that's going to be very constructive. So we're resting right at all-time highs right now. So here's the question. To believe that the bull market's going to continue, which are you paying attention to? Are you paying attention to the headline data? Are you paying attention to all of the doom and gloom YouTube videos of everybody saying the market's about to crash? You just don't know it yet. The market's about to crash. Michael Burry's right. All of these other people that are predicting that the market has crashed and they're just not telling you yet. They're masking it, right? Well, what's more important right now? The fact that we are resting at all-time highs and continuing to go higher on a month-by-month basis, or the headlines that are designed to scare you. They're designed to get you to click. They're designed to get you to watch the video. I will tell you from experience that bull market runs can continue to go much, much higher than we ever expect them to go, but we need to know when the tape has changed. So I believe right now that I think we can continue. However, and this is a big deal because we spoke about this last week, actually just last night on our Sunday swing trading session, which is essentially if you're going to actively trade, you need to know what price action needs to look like in order for you to feel comfortable taking risk. Now, the market, and again, if you happen to be in the boot camp or our swing trade community, I have dramatically cut back on my activity level and my position size the last 6 weeks because the market right now is not perfect. We're not seeing higher highs, higher lows with any kind of, well, actually, I should say October was okay, but since the end of October, we have kind of been down to sideways. So I am still bullish, but I am not bullish with the same position sizing. And that's an important thing to understand. If you believe all market conditions are the same, regardless of how the tape looks, and you continue to take the same type of risk, that just means that you don't have an edge, because edge literally means the probability of it following through is greater. Every situation is not the same, so you need to understand what that needs to look like. So what we're going to do right now, I believe we're going to continue until I see the tape change. So what that means is, for me as a trader, I am bullish until I see reasons not to be bullish. Now, we're looking at some stocks like Tesla, which I want to point out here. Tesla right now is kind of clinging to pretty big support level. I just want to bring this in here, which is the 50-period simple moving average. It had a bullish U-turn here. Actually, here was a short covering rally. If you remember, we did that video. Then the stock had pulled all the way back for a few days, had a bullish U-turn again, and had another bullish U-turn again at the 50. The 50-period moving average in Tesla well, for every stock, it's a really big deal, but we need to see this actually go well bid on the weekly chart right now. So we're seeing a lot of this kind of thing where there's topping type action, we're churning around, but we haven't started to go down yet. You got to make a distinction between, are you looking to make your own decisions, or are you looking for headlines to tell you what to do? I can't stress this strongly enough. If you're watching this right now, I'm going to assume that you want to make your own decisions. That means that you need to start putting these pieces together in a way that says, I am a buyer of Tesla until this happens. I am a buyer of the SPY until this happens. It's the until this happens part that a lot of members of our community are missing. It's, I want to keep being a buyer of Tesla and continue to buy it. However, because I'm telling you the tape is not as obvious as it was even 4 weeks ago, you need to ask that second question, whether it's your individual stocks, whether it's the market, whether it's sectors. I want to be a buyer until this happens. I'm going to challenge you now this week, especially now that we're heading into the last week of the year. We have inflation, we have CPI, we have the FOMC this week, and we have quadruple witching on Friday. There's a lot of stuff that has to be absorbed this week. So now you have to say, I want to be a buyer until I see this happen. It's this second piece that will distinguish you from all of the people who are struggling as a trader to somebody who says, I know exactly what I'm doing. If it happens, then I'm going to be good. So let's, again, that's a lot of lead up into looking at the stocks in the Dow right now, because I can't stress this strongly enough. A change in the tape has happened. There's underlying conditions where it's not as loaded to one side of the boat, where there were no other currents viable enough to see the market roll over. I'm not saying we're rolling over. I am telling you the tape has changed, which means that we have to change our context, that maybe we should scale back a little bit. Maybe this week will be when it happens and we break through and now we start another rally, but we are sideways now for a few weeks because of all of these other headwinds. So what we're going to do actually right now is we're going to jump into the stocks of the Dow, and I'm going to go through all of them, and we're going to take a look and see which ones are tradable and which ones maybe a little bit too far and which ones I wouldn't be touching at all. All right. So we're actually going to start out. We're going to use alphabetical order. I'm going to start with Apple. And remember what we talked about in Apple. Let me actually get this off the screen. And we're going to talk about what the stock normally does. And we actually went over to this most recent move over here. And then we compared that to this move, and we compared that to this move. So Apple right now is 6 days in a row, well bid and into all-time highs. So at this particular moment, I love Apple as a bullish move, but I am not looking for Apple to be a buying opportunity today. So I want to make that distinction. I'm looking for a pause. I'm looking for the stock to slow down for a couple of days, and that will help me justify new risk. I will be looking to day trade it, but I won't be looking to initiate a new swing trade today. All right. Amgen. Amgen is still in a bearish move, so I'm not looking to do anything here. We broke the trend here and actually came out. So we're going to reset that move to the downside and draw a new box. So that's a pretty wide box at Amgen. So Amgen would have to get above 215. And that's actually something I want to talk about as well, because if you remember last week, we mentioned Roku. We talked about Roku having that big news where YouTube is going to stay on the subscription. We said this is the first time Roku is reversing in a meaningful way with volume. It happened about a month ago, but the volume wasn't awesome. First time after 5 months of selling. And we were super clear, because I had somebody on a comment saying, I watched your video and I read your headline and Roku went down anyway. You have to pay attention to the whole part of the trade. We were very, very clear that said this is the first time it's reversing with heavier volume after 5 months of selling. If we look to initiate a position, we're waiting to see it pause. Do they hold the bid? If then, we would initiate it with a smaller position. All of that was the part of the trade, not just Roku bounced. That's what's going to separate you. So we're looking at the same thing here in Amgen. This is now the second time it broke the trend. Now we need to see Amgen get above 215 to justify an initial first piece beyond this break of this trend. All right. So Amgen would have to get above 215. American Express, a lot of the financials really have not been in play. I'm not looking to do anything here. The way I would break this down is if we were working together, is I would say we're basically in the middle of a 6-month trading range. So I don't see anything to do here right now. Boeing is another interesting one. We've had this trend line that we keep drawing. We kept waiting for it to get over 230, kept waiting for it to get over 230. I don't see a trade here in Boeing at all right now. Caterpillar, very similar. A big, giant trading range right now. I do like the fact that we bounced and paused. Maybe we can justify a trade here if we finally break here. But again, very, very little edge here in Caterpillar. I'm not looking to do anything. You can actually take a look there. It's probably even a better way to put it. You can see very clearly it's in the middle of the last 6 months. CRM was actually looking terrific until earnings came out. Earnings absolutely crushed the stock. There's nothing to do here. Cisco, a little bit different story. We actually talked about the fact that tech is carrying the weight right now. Not only is tech near the top of this list right now, but our list of top stocks, you can see also dominated by technology and consumer cyclical. So that's actually one of the windows of opportunity I've been looking for right now. Tech and consumer cyclical, which consumer cyclical right now, we're really talking about electric vehicle stocks. And don't forget, these gains are mostly off of last week. We need to see them starting to hold those gains. So as far as tech is concerned and Cisco, this is a pretty nice move. And you can actually see that we're manifesting that on the weekly chart as well, where now the weekly chart went from an inside week to well bid to another well bid week, with 60 being the next level. So I like this one coming out of this optimal entry here, which it paused for roughly 3 days and rallied again. But here's how I'd be breaking this one up. Because this same level is where sellers came in last time, this would actually be a two-step trade. So I want to be clear on this. I like Cisco as a long today. It's just breaking out. It's the first day coming out of the optimal entry, but it's going to be a two-step trade, which means less share size on the initial entry because it's right in front of a place where sellers came in and knocked the stock down. So we're battling the last sellers with new buyers at the same price, which is right around the 59 level, between 59 and 60. So that would be a first piece of a new entry here, adding over this level if it gets through there. So Cisco in a two-piece trade. Now, again, if it breaks this level, we get the entry and it pulls back in, it's going to be a small loss, which is a normal part of trading, but more importantly, a small loss because we just put those two pieces of the trade together. That's a big part of trading as well, especially if you're swing trading. All right. CVX, we mentioned this one last week. We were looking for CVX to stay above 118, I believe the level was. Now it's above 118, but a giant engulfing candlestick on Friday. So it's actually a 4-day pause. So I actually do like these long today, but what I don't like is melted candle, 5 days of melted candle. I want to see more of this as opposed to indecision, 5 days of indecision. I like the long. I don't like it yet. Let's see. Disney, I don't have anything to do here. Disney actually got crushed after earnings. I had a couple of people I actually had a couple of people messaging me on here on YouTube that they're investors of Disney and they're excited that the stock got crushed on earnings. That's probably one of the silliest statements I've ever heard, quite honestly. If the stock is going down, that means that, especially getting hit hard on earnings, something about the next cash flows that they have was not good. So if you're dollar cost averaging, that's a big difference from trading again. There's a big difference between working a position versus your long-term investor in the trade. But it's tough to say that I love the earnings because I'm a long-term investor, but I bought the bounce and got out on that quick move. You're kind of mixing trading strategies, what makes it a little bit tough. All right. All right. So I want to get back into, I don't see anything to do in Disney right now. Working our way over to DOW. Same thing. Nothing to do here. And again, as you start to get better at reading the order flow and reading the tape, there's one question you need to ask. And the question really comes down to, is it obvious? Remember, the easier trades, and again, I got all these gray hair before I started to really get a stranglehold on what order flow actually means. The way that we trade, the way that you should be looking to make things easier on yourself is you need to answer the question very quickly. Is it obvious? Is order flow obvious? And is there the right time to hop on board? So what's interesting here is if we look at Dow, the bullish order flow is not obvious. So there's not even a reason to look for an entry. Apple is absolutely obvious, but the entry right now is too late as far as a swing trade is concerned, even though it's resting at all-time highs. So is it obvious, and is now a time to buy? So again, this is what separates somebody who's in control of the outcome from somebody who's frustrated out of your mind. First, is it obvious? Get a good answer to that question. Then the second part is, should I be buying right now? It's that second question that a lot of traders get into trouble where they're chasing price, pulls back on them after they bought, they get out, and then they say trading doesn't work. It's not that trading doesn't work. You just have to ask that second question, and hopefully we're inspiring you to do that right now. Okay? Okay, so let's finish up. Let's keep going. Let me see. Do you send an alert when you enter swing trade? Yes, I do. Andy, we actually, just to give you an idea of what the alerts look like, I'll show you one from last week. So this is our Discord community, and this is what the trade alerts look like on the swing trading side of things. You can see we have a lot more in here, but we give the trade, we give the entry, we give the stop loss, the risk, the share size based on how much you're risking per trade. If and when we decide to add trades, the current price relative to when we're getting in, initial profit targets, the gains, and the average true range. So we do give the trade breakdown from start to finish on the swing trade side of stuff. All right. So Apple is nothing right now, is obvious, but not a trade yet. Financials looked a little bit better last week here, but they just kind of fizzled. So we're kind of still looking at holding back on the financials. You can actually make an argument right now that Goldman Sachs is in a gigantic trading range. There's really no other way to put it. It's kind of stuck in a range since August. Last week, we were looking at possibly getting long Morgan Stanley up here. You can see we have the 106 level, but we're still not doing anything here. So I want to be clear. As of this moment, I'm not doing anything in the financial stocks because They look good for a couple of days, but since then, haven't really found an edge yet. All right. Home Depot is a different story. Home Depot absolutely is at the top of my list right now. You can actually see, no matter what time frame we're looking at right now, the monthly chart looks great, and you can see these pushes and pauses pretty clearly. The weekly chart looks awesome. A push and a pause, a push and a pause, a push and a 3-week pause, a push and a 3-week pause. And now on the daily chart, we're actually looking pretty good as well. So two different scenarios there. Apple still looks good, but not today. I got to wait for the pause. Home Depot looks good and has paused. So I'm looking to initiate a first piece of my entry on Home Depot today. Okay, so I want to keep going as promised. I want to make sure I go through the other stocks. Honeywell, nothing to do here. Order flow is bearish. IBM had a little bit of a rally off the lows. Same thing as Visa and MasterCard, but absolutely potentially a 1, 2, 3 bottom here. So if we zoom out a little bit here, you can see that some support has been coming in at this level, and we might be looking to reverse here. So IBM might be something I'm looking for. So let's actually take a look at that and have the conversation on that. The longer-term order flow in IBM is still bearish, but the short-term weekly order flow the last 2 weeks has actually reversed to the upside and closed stronger. So IBM might be something I'd start to pay attention to, put in my tracking journal versus today's game plan. So IBM is becoming a little bit interesting with obviously all those other tech stocks near the highs as well. So let's move on over into Intel. Intel had some really good news about electric vehicle stocks, exploded to the upside about an acquisition they made in 2017, pulled back, nothing really to do here yet. And I want to point this out as well. You'll hear me mention, especially if you're a regular viewer of the channel, I spend a lot of time saying, how long has smart money been allocating money to that idea? How long has the deep pockets been building a position in that idea? And this is really the biggest thing I want to bring out to you. Our job is to find out if it's obvious. And if you think about it, let's just use Positive Mike. I love that name. Let's use Positive Mike as an example. Let's say Positive Mike has a hedge fund and he starts to buy Intel. How long has Mike been buying Intel? Is it 1 day, 1 week, 2 weeks, 2 months? If it's only 1 day, as Intel's showing here on that big news, or even Roku last week, quite honestly, that means that if you decide to get involved, if it's Mike's first time he's building a position, then we want to mimic what the smart money's doing. So if we get involved with Mike and Mike changes his mind a week later and doesn't allocate anymore, we're okay because we saw it was Mike's first time and we're just initiating the first piece. And that's a big, big thing that a lot of traders don't understand is position sizing. We called it position sizing context on our Sunday night call last night, that you have to recognize the conditions and then those conditions will tell you the right share size. If you have a great deal, you go with a little bit heavier share size. If you have a mediocre deal, you reduce your risk on your initial, and then you wait for feedback to tell you, okay, we're getting follow through. The smart money stepped up, and now we can add with them. So Intel last week had a great news story, but as of right now, the buying pressure hasn't stepped back up. Now, we did close in basically in the middle of the range on Friday, so I would need to see it take out at the very least Friday's highs for me to even consider looking for that news story from last week on the EV company that they purchased, I believe it was 2017, to step back up. So right now, Intel is interesting, but it's not a trade for me yet. And these are the kind of things you need to run through your head. What makes it a trade? Okay. Working our way down to Johnson & Johnson. We've actually finally broke this long-term downtrend, but now we have a much, much bigger box right here. It clearly needs to stay above 166. Looks like it's going to open. So again, 166 is the level, and again, how did I come up with that number? Well, where does it keep struggling? It keeps struggling here, struggling. Get above 166. The way I talk about it in the community is wake me up when it gets above 166. JP Morgan, we talked about the financials. I don't have anything to do here. We actually have 2 months of selling right now, so nothing to do right there. I'm not guessing any bottom. Coke, we talked about. If you go into the sector rotation, consumer defensive is halfway up the board and actually had a pretty good week last week. Coke, Pepsi, all those kind of things. It's in a much longer term trading range. I would have an alert set for 57, which is right there. So until it gets above 57, I wouldn't do anything. And by the way, I just kind of said that off the cuff, but it's very important for you to understand. I like Coke if it can get through 57, but I'm not doing anything until it gets through 57. So I just kind of threw that out there, and hopefully it's something that I'm inspiring you to do. I said I like Coke over 57. So that means that all I'm doing right now is I'm setting an alert at 57, and if it gets up there, then I will evaluate it for a new trade above 57. And actually, I just showed you that in we mentioned this last week, which I'm going to show you this on the screen again, just to give you an idea that we do exactly what I'm talking about. Is last week we mentioned XLE was strong, and this you can see here. This is on the 7th. Because the XLE was strong, if CVX holds 118, then look for an entry, and we actually put the chart in there. So these are the kind of things that hopefully I'm going to inspire you to do these kind of things on a day in and day out basis. Yes, it's bullish, but where is it a good trade? And if it's a good trade, what do I need to see? It only takes 2 seconds, but you'll save yourself a small fortune by taking that one extra step and saying, I don't like it until it gets to that level. Just set the alert and let me look and see which other ideas are better right now. Okay. All right. So that's what I'm looking at in Coke. McDonald's actually had a pretty good week last week. If you remember last week, I actually said I like this rally coming out of this optimal entry here. I was looking for it to pause above 256, 258, but it didn't. It just kept going again. It's a little bit too far extended right now. It's almost a $20 move in just over a week. So I'm going to look for the next pause in McDonald's before I put on a new trade. I would look to consider day trading it today. 3M, nothing to do. You can see the bearish order flow for several months. Merck has kind of been all over the place. Nothing to do here in Merck. Microsoft, I love coming out of this 3-day pause, resting right in front of all-time highs. So Microsoft, absolutely something I'll be watching to trade today. Nike actually not that far off of all-time highs, but you can see again, we talked about reading the tape on the weekly chart. Look at that weekly chart of Nike. Absolutely nothing to do for 5 weeks. So I'm not looking to do anything in Nike right now. Let me reset that. You can see the consolidation. If you're good at drawing, if you like working the charts like I do, we basically have a big pennant here in Nike right now, and we need to break out of this consolidation. If it breaks out, we could be looking towards all-time highs. P&G had a really nice week last week as well. This would be a day trade for me, not a swing trade. And when I say that again, remember what we talked about with Apple at the beginning of today's call. Is it a long? Yes. Long meaning, is it a buying opportunity? Is it a buying opportunity as a new swing trade right now? The answer is no, because of how far it's extended. This is actually a little bit of a different scenario because it actually did pause here for a couple of days before it took off again. So now if I'm just going to use round numbers, if the stock normally does 10 and it's only gone 5, is that still a swing trade? The answer is yes, it is still a swing trade, but it would not be with full share size because it's already done half of what it normally does. Okay. Let's keep working our way over. I want to make sure we cover all of them. So travelers, I don't have anything to do here. You can see the order flow is still kind of a mess. It's not obvious. UNH is a little bit different, very similar to what we talked about in Apple. I love this stock, but I'm going to wait for it to pause for a couple of days. Bullish U-turn. Remember, you can start paying attention to these signals. We talk about them pretty much every day. Bullish U-turn into well bid 1, 2, 3, 4, 5, 6 well bid days in a row. Well, when's the last time the stock went 6 well bid days in a row? You probably can't even find it. So this one's a little bit to the day trading side today, but not so much looking for a new swing trade. So it's actually opening up higher again this morning. Visa is a pretty interesting one. This is a pretty nice rally off the lows. What I'm looking for now in Visa is to pause this week before I see it rally again. Verizon, absolutely nothing to do. You can see that the order flow is bearish and bearish hard. There's really nothing at all to do here. There's nothing but selling for several months. You'd just be guessing right now. Walgreens Boots Alliance stuck in the middle of the range, and Walmart came back a little bit last week. Maybe this is a potential 1, 2, 3 bottom at support. You can see a couple of times it got down to this price level once, twice, 3 times, 4 times. Pretty interesting, but I'd probably drop it down to the hourly chart and start to pay attention to what it's been doing recently. And this is okay, not near the top of the list, not near the top of the list. All right. I've already gone 10 minutes over, everybody. I can't look at any more charts right now. We have to head over into the game plan meeting for the boot camp. But I just want to give you this. I want to leave you with this. And we had the theme of today being, can the bull market continue? And look, let's face it. Absolutely nobody knows the definite answer to that. Let's just talk like we're friends here. Nobody knows definitely whether it will follow through. But if you understand order flow, if you understand how to read the tape, and let's not get into the super nitty gritty of that, what that really means is if you have a reason for buying stocks right now, which hopefully you do, you also need a reason for no longer buying stocks. It's that second part of the equation that so many traders could potentially get ran over because they don't have a structure, which we just showed you on the weekly charts. We said if you're going to learn how to read the tape, the weekly charts will tell you if it's still valid or if it's changed. Work your butt off between now and, let's say, January 1st to really get deep into your own trading game plan, get deep into your own strategy and say, okay, I'm really good. Maybe you are, maybe you're not, but let's just say you are. I'm really good at finding good ideas. That's step number one. Then you have to ask yourself that second question, which is what I see a lot of people do not ask, is what do the conditions need to look like for me to change my mind? Critical thing to have added to what you do. It could be as simple as a moving average crossover. It could be that you see the monthly candles red. It doesn't need to be complicated, but it needs to be definite so that if that happens, worst case scenario, you scale back a little bit. Best case scenario, if it turns around, you're in cash because you recognized it changed. As of right now, we're still pointing higher, and I'm going to continue to look in that direction until I see it change. If that changes, then I'll change how I plan to trade it, and hopefully you'll be here with me, and we'll be doing that same thing together. All right? I have to go and head out to our other call, everybody. I want to thank you so much for joining me. We do these videos every day. Join us 7:30 in the morning. If you got some value out of this, smash that like button and hit the subscribe button so you get updates on when we do new stuff. All right? Have an awesome day, everybody. I want you to know how much I appreciate that you're here with me. It means a lot to me. All right? Take care now.